Good morning. Facebook announced after the market closed yesterday that it was acquiring Oculus virtual reality for $2 billion in cash and stock. The deal is heavy in stock with 23.1 million shares and $400 million in cash. The agreement also provides for an additional $300 million earnout in cash and stock based on achieving certain milestones. If you're not familiar with Oculus, it's a hardware company that is developing a virtual reality home product. It has no retail product yet. It's only in the development stage, but the buzz around the company is very loud. However, is it worth $2 billion that Facebook is paying for it? And will shareholders be happy with this dilution? Joining me now is David Nelson. He's the chief strategist at Bell Point Asset Management. David, Zuckerberg has been on this spending spree. I mean, how much has this and the WhatsApp diluted the stock?
Well, if you take both WhatsApp and this, you're talking about $21 billion that he spent in the last month. That's about 12% dilution. No question that Mark has the vision thing going. I think a lot of analysts and investors get that. The question is this going to be value creation somewhere down the line? I did find one thing refreshing in the conference call that was different from the previous call. It was less giddy. And analysts were starting to ask some tough questions. And one analyst right at the top said, I'm getting questions from some investors. What are some of the milestones? When are we going to see some payback?
I kind of see where he's going with this. I know with the WhatsApp, you can do smart purchases at smart boxes, and it's very popular overseas. I kind of see that maybe you could combine that with the Oculus hardware, make like a Facebook Google Glass type product that you could just walk up to a box and purchase something.
But Deborah, you got to admit, first of all, it's unproven technology.
That's true.
He used in the conference call, he said these companies are incredibly rare. Well, maybe not that rare. Sony has for their PlayStation division has, I think they call it Project Morpheus. That's a virtual reality platform. I think Mark is telling us that his stock is very expensive, and he's using an inflated currency to buy up assets.
Well, you bring up a good point. When we look at the chart, the stock over the last 6 months, you've seen this kind of rolling over. I mean, People are starting to kind of lose their giddiness over the stock.
It was a love fest after the last deal, but if you look at what the stock's done in that time, it's actually underperformed the market. I think it's down about maybe.
It's down 7% for the past month.
Is it down 7%? Okay, I didn't realize it was. That's even worse than I thought. Look, if you were a bull coming into this deal probably isn't going to change your mind. But I think some hard questions need to be answered here. I get the fact, I understand what he's trying to do, but he's looking out 10 years in the future. One of the questions I would have asked on that call, if this is an unproven technology, joint ventures may be a way to go in the future.
All right. Is Mark Zuckerberg the next Steve Jobs? Well, so far the market is not too happy with this latest purchase. I'm Deborah Borchardt reporting for The Street.